Hello everyone, here is Billy, CEO of ADM Securities, and Alex Suslov, Head of Capital Markets at A&D Mortgage, with you for our weekly digest.
Hello everyone, hello Alex.
Hi Billy. Today we'll be touching on economic news and a little bit on sports news, right Billy?
Correct. We've had an interesting week since our last connection. The last digest, we've seen unemployment numbers come out. The unemployment rate dropped to 10th, just like it was expected to. The non-farm payrolls were sharply lower than what they thought, but a revision to the previous report offset it, so it was kind of a wash. And yet, 10-year and 5-year yields have been up as much as 35 basis points since that last meeting. So more of the same, higher interest rates, flat yield curve, and we're having to deal with it.
We saw an inversion of a yield curve. Do you think we'll see a rally in 2 or 3 years in the coming week or so?
I think so. I noticed that the 2-year yield now, to the spread of the 2-year yield to Fed funds, is in excess of 200 basis points. It's only happened 3 times in the last 45 years, and each time it happened, it immediately went the other direction. Now, what can make it go the other direction is the next Fed rate hike, which will be next month. But what it does say, and it is factored in rate hikes into December at all of the rest of the Fed meetings this year. So it kind of tells me that the 2-year, even if it doesn't rally, can't really go up too much in yield unless they're going to start to discount rate hikes well into 2023. And I think that may be getting ahead of the curve.
Correct. And today we see conventional rates at 4.7% on average and non-QM rates at 6.5%. And we know that our non-QM rates are on the shorter part of the yield curve, and conventional rates are closer to 10 years.
Correct. And the short part of the curve, again, inverted yield curves happen. They sometimes foretell recessions, but they tend not to, well, they never stay inverted long. It's usually a short-lived event. So that tells me that the short end of the market is probably ready to rally.
Let's talk a little bit about quarterly results for first quarter 2022. What do we see? What has changed for treasuries and all the different rates?
Alex, the last time we met, it was still first quarter. Quarter has ended. Now we can look back and see what the markets did during the quarter. Crude oil was up about 40% and at the end of the quarter, and that doesn't even consider that it closed out the quarter at about $100 a barrel, had been as high as $130. 2-year yields were up about 160 basis points for the quarter. 5-year yields, I think, up about 115. 10-year yields up about 80. 30-year yields up about 55. 4% Fannies down about 4.5 to 5 points. It's fair to assume the second quarter will not look like the first quarter. It may not be a strong rally, but these markets have, I think they've gotten, the worst is behind us.
That is good to know, Billy. We're very excited to see our rates stabilize or maybe even get better in the coming Q2 of 2022.
I think we can look forward to that. I think we can expect it. I think the next month or so could see volatility in both directions. By the next Fed meeting, FOMC, I think we'll probably begin to see the markets improve.
That is great to know.
So Alex, going forward, what do we have to look forward to with the non-QM products and webinars?
Non-QM rates are pretty high today, as we already discussed. 6.5% is the average non-QM rate today. We are offering a promotion for the month of April, which is already included in our rate sheet. So you just go and lock it. Interest-only loans are cheaper today. You can get a better rate than interest-only. We have a promotion which gives you a quarter credit versus what it used to be in the month of March. So we're looking to grow the book of business with interest-only loans and provide our brokers and borrowers an opportunity to get a lower payment over the first 10 years of their mortgage.
Excellent. Sounds exciting.
So aside from that, we are launching our updated jumbo program starting this week. It is a full jumbo AUS product, so you run Fannie Mae DU on your loan, you get approved and eligible and move forward with the loan. The minimum FICO will allow us 660, maximum LTV is 89.99%, and our pricing gets even better on our jumbo product.
It's all exciting news. So Alex, tell me what's new in the tech side of our company. What have we got? I know we've recently launched the automated decision maker. How's that going?
That is going good, Billy. We have more and more brokers experiencing the platform. We hear good feedback. Our IT team is always available to help you guys. Just reach out to broker support or IT for any help on that, and we'll actually host a webinar with broker support Q&A session where brokers can ask any questions related to technology, programs, and the process that we have at A&D.
Excellent. Sounds exciting. I'm looking forward to it myself.
Perfect.
Alex, everyone else, it's been a fun week, and we'll look forward to doing this again next week.
Thank you, everyone. It was a A&D Mortgage Digest with Billy and Alex. Stay tuned.
Thank you.
Thanks, Billy.